All right, guys, back to work. Back to work. Hope you guys had a fantastic weekend. Let's make some more money this week. Now, boy, you might have noticed this, but the markets are feeling a bit confused into the closing bell this afternoon, right? It's easy to see why. We had that big move down this morning, that big move right back up, kind of chopping around right now. Again, markets feel a bit confused. Now, there are two really easy clues on the charts that will tell us why the markets are confused, but more importantly, how we can use that confusion to make some really easy money on Tuesday. Of course, I have a number of good trades, some simple trades I'm tracking for tomorrow. And by the time we're done this video tonight, you'll have an easy roadmap so you know where the best entry are to make some money on Tuesday as well. Now, before we jump in and talk about my favorite trades here for tomorrow to profit from that confusion, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these lessons, if you like these videos, do me a favor as always, hit that like button for me. Give me a hell yeah. Give me a shout out down in the comment section below. Either way, thank you so much for tuning in, supporting the channel, sticking around tonight. Let's get into it though. Second week of the month of February. If we do half as well as last week, I'm sure all of us be quite happy here. Charts are already, as you can see in front of me. I got my Nasdaq and my triple Qs. I got my Emini and my SPY all set to go here. Now, markets are bullish overall. You can see that big move higher we made last week on the Emini S&P, and of course the Nasdaq got that beautiful range reversal on the Nasdaq. Everything's bullish right now. We can easily see that, right? It's pretty obvious. But you'll notice once again, right, we're getting a little bit choppy up here into major resistance. And I think the biggest clues right now are going to be the tick charts. 60-minute time frames are good to give us an overall directional look at the market. But the best entries, the best exits, the why we're so confused and how to profit from that confusion, I think is all on the tick charts. We'll grab that here in a moment. First, though, before we check our tick charts, talk about entries for tomorrow, let's check our schedule for tomorrow because there's a couple things I want you to be aware of. There really isn't a lot of major news here this week. This, of course, second week of the month. There isn't a lot of major news. No major news tomorrow. We really don't have any major news really all week that we know about right now. We do know, though, is last week Powell said no rate cuts in the month of March. And now we assume this week, all the traders will be listening in to all the Fed speakers coming out and reading the tea leaves to see when that first rate cut is likely going to be. Will it be this summer, this fall? We'll be listening in this week, pretty much all week this week, to all the Fed speakers and see if they tip their cap to us, tip their hat on this as far as when that first rate cut is going to be later on in the year. So not a lot of major news for us to worry about here today or this week overall. But again, I'll be listening in to those Fed speakers, and I would assume the markets are listening as well. Now back to our charts though. It's good to know when the news is, but by now, you should know this by now, the money is made on the charts. Let's now go to my favorite trades here for tomorrow. We'll start first here on the E-mini and the SPY. We'll wrap things up here on the NASDAQ and the triple Qs. As I mentioned in the introduction, we are bullish here on the 60-minute. That's a good tool to use for the overall directional bias. But look at how choppy we're getting right now. Looking pretty choppy. Market felt confused today. The real clues are on the tick charts. Let's drill down now to a much faster time frame. This is a 7,000 tick chart. You'll notice linked up in the upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA. If you're tuning in for the first time tonight, we do not trade off time charts in our trade room. I think tick charts make everything easier to profit with. And this tick chart gives us two very important clues. First big clue was that big move higher that we saw last week. This chart can be zoomed out a little bit more, right? Look at the size of that move. Now, anytime we see a really big move in one direction, what do we always talk about? We wait for that two-legged pullback and we buy the dip, right? Two-legged pullback and a retest of that high. If you watch last week's videos, this should be a refresher we talked about last week. So the first clue is really important. A big move up last week says don't buy high, right? Don't buy high. Wait to buy low. And to do that, we'll use a two-legged pullback that goes a little bit more than a measured move, right? That should be review from last week. The second clue, I think, is really why the markets are being a bit weird right now. And that is the strength of that move down. That two-legged pullback had some punch to it, didn't it, right? It really ran. Anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that level. So put these two together here right now. We're bullish overall. There's no doubt about that. We get that beautiful two-legged pullback for the initial buys. We got a beautiful reversal this morning off this pullback in our trade room. But now we have to think the sellers are going to try to retest that low. I love the idea of a double bottom reversal. I think bear traps are the name of the game for tomorrow. There are a lot of ways in which we can trade this for tomorrow. Now, first, let's talk about my favorite trade for tomorrow. My favorite trade for tomorrow is to go back and retest that low and double bottom right back up again. There are 3 different variations of that we'll talk about. And then later on in the video, we'll talk about my least favorite, which of course is if we go higher without the pullback. I want to go lower here, but we may not get it. If we go higher without that pullback, you're going to want to make sure you watch this entire video tonight because it's easy to make money and lose a bunch of money up there if you don't know what you're doing. So I will give you a reason to stick around all the way to the end. But first though, let's talk about kind of my favorite trade here for tomorrow. And again, it's pretty simple, right? It's a very strong move down. We expect that market to go back and retest the low, or at least try to retest the low. And to do that, this is a pretty easy game plan. If I can take out that low, I would love to go in and get another one of these, right? Very simple. I don't have a crystal ball, and for all I know, this thing will keep on going quite a bit lower. However, once those bears pull back and start trying to short this thing into that low, like over here, right? They pull back once, they pull back twice. Once they get stopped out, we can then buy into those stop losses. In my free video classes, I call this a try failure pattern. In this situation, it'd be called a double bottom retest. So strong move down, expect that retest of that low before it makes that run up. But again, I have no crystal ball. I don't know how far that move will go down. So rather than trying to pick that bottom, what I'll do is I'll wait for these bears try once, wait, try twice, then think about now where are their stops and buy right into those stop losses. I always love a try failure, and then as we go high, remember, where does the market want to go? It's that big mop, right? They want to go back and take out those highs. So as we make our run going higher, the follow-up trade is always going to be a bear trap trade. Now, bear traps are very simple. It's a higher high in price and a move just below a prior swing. Give me a nice strong signal candle closing above the 21 moving average, and we'll look for that long, right, going higher. We know where the targets are on this, right? Targets off at a swing high overhead, and definitely leave a target right up to that high overhead. Again, this would be that double bottom retest. What it really is, if you're in my free video classes right now, it's a try failure into a bear trap, and again, trying to go back up and take out those highs. Now pay attention here because it's very, very important. I want that double bottom, right? I want that try failure pattern to buy into stops. We may not get that. It may take out that low. There may be so many buyers down here that it simply V bottoms off of that low. If it V bottoms off of that low, again, I won't get the try failure that I want, unfortunately. What I will look for, though, is then going to be that bear trap. All right? So we don't have to get the try failure. If it's just simply V bottoms, again, not my favorite trade. I'd rather go lower, trap the bears in, and be in that thing long. But if all we get is a V bottom, then what I do is I want to buy as low as I possibly can. And the way you do that is with, in this case, a bear trap. It's a higher high in price and a trap below that low. Like over here, right? It's a higher high in price and a trap right below that low. So that pattern right there, that's a gorgeous example of a bear trap, right? I want something like that over here, right? Makes sense? That is a V bottom. It may V bottom here, bounce back up. There could be multiple bear traps. Bear trap right there. As it runs higher, we may see another one. The goal, though, is the higher this thing goes, the more important it is to buy as low as we can. I don't want to buy into that high. And again, later on in the video tonight, we'll talk about how to capitalize on this if it does run higher. Because again, that's the least desirable situation, but I want to make sure you guys have a game plan. So if we do V-bottom off that low, if it V-bottoms off that low, right, the key is get that higher high in price and that bear trap below that low. That higher high in price and get that bear trap below that low. This is what these two clues are telling us. Big move up, two-legged pullback. The strength of that move down, though, says do not be surprised if they run the sucker lower, bear trap, and bear trap on the way back up. All right, now let's slow down for a second. At this point, the game plan, I think, is pretty simple, pretty straightforward. I know most of you guys know how to use traps, you know how to use failures, you know how to use stops, right, to fuel your easy profit targets. But if you're watching for the first time right now, this might be brand new to you, right? Bear traps, failures, range rotation, this might be a whole new language for you. Don't you worry. I teach all of these setups. I have hundreds of examples of failure patterns, double tops, double bottoms, and tons of bear trap examples all linked up in our free video classes. I'll put a link up top here for you in the upper right hand corner. Grab that link that popped up there and take that free trading class, because inside that short video series, I'll teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be that day. Then once you know where to look for the winners, then I'll teach you 4 of my favorite entry patterns to help kickstart you making money. If you're not making consistent money right now, if you're tired of missing the best trades each day, if you still haven't qualified for that funded account with Apex or Top Step, hit that link up top there. Take that free course. It's perfect for someone trying to make the jump into full-time trading. Again, I have hundreds of examples of all the pattern setups, especially lots of trap examples, lots of try failure examples, all the rules written down, give you an easy roadmap to make more money on your own. And as always, if you can't grab that link up top there, if for some reason that link won't work for you, I'll put all the important links, the description of the YouTube video. I'll put my free class links down there to get started there. We trade together every morning in our trade room. I'll put the trade room links, the description of the YouTube video. I'm also on Twitter during the day in between these YouTube videos. If you're on Twitter, find my handle down there as well. Give me a follow, and I'll keep you posted with charts and updates throughout the day on my Twitter feed. All right, guys? So now, hopefully by now, you know why I said earlier that I think bear traps are the name of the game for tomorrow. The only thing I haven't talked about yet is there are 2 things I've left over, right? One would be if we go higher here. We're going to cover that in a moment. But first things first, though, what if we don't get the low day tested? You know, I could easily see this. Oftentimes, we'll get a little bit below a prior swing like that, right? Like that, and then run higher. What if we don't get that full move back down to retest the low? How would you buy that? Can you buy? You can absolutely buy it, because again, we know the buyers, they want to go back and retest that high. That's their goal right now. But how would I trade something like this right here? It'll be, you guessed it, exactly right, another bear trap. Now, think about this one. What'll happen here now is the bears will come in, they'll try once, they'll go higher, they'll try twice. And remember, the reason why I have to use bear traps right now is because the threat of that move going back down to retest the low. Right? That's why bear traps are so valuable right now, because I need to trap those bears in. I'm anticipating those sellers are to try to run back down to that low before they make the move higher. Knowing that mindset here of those sellers, I'm going to keep using those bears try once, bears try twice. And again, I want to get that higher high in price and that trap below that low. It's the same pattern we saw over here. There's a lot of them, right? One right there. There's one right there. There's one right there. They're everywhere. Once you learn traps, you will begin to see them everywhere on the chart. Now the $1,000 question, maybe the $10,000 question for tomorrow is if we go higher, right? If we go higher, there are a couple key setups I want to keep in mind. Let's talk about this now over on the NASDAQ. The NASDAQ's pretty similar to the S&P, but I think you'll see right away here, there are some key differences here between the NASDAQ and the S&P. The NASDAQ, once again, right, we're bullish here on this 60-minute chart, but like I mentioned earlier, right, we're running into resistance, getting kind of weird, right, getting a bit choppy and confused here on the NQ. Let's now drill down to our tick charts. Again, we trade off tick charts. in our trade. I think they make everything easier. On the NASDAQ now, right? The NASDAQ had something similar to the S&P where last week we had that big move going higher, right? Anytime we see a big move in one direction, we don't want to buy high, we want to buy low, and usually that means a two-legged pullback. Now, a great example today on the NASDAQ, right? The NASDAQ keeps on going through that two-legged pullback. This is why we don't pick bottoms, because we don't know how far that thing will go. What I do know, though, is once we pull back to the moving average and those bears come in and they short once and they short twice, I see you, I know where your stops are, and now I can buy into those stop losses. A great example of where on a two-legged pullback, and again, if you watch last week's videos, if you watch those videos, especially Thursday night last week, we talked about when you get those two-legged pullbacks, don't pick the bottom. Wait for those bears to come in. Let them try to commit. Once they commit, you know exactly where their stops are, and you can squeeze those stops. So a great example, we call it two-legged pullback. A lot of students making bank on that this morning, on that big bounce in our trade room. So well done on that. But again, the second clue I think is really, really valuable. Second clue right now is that strong move down, right? That two-legged pullback was very strong. And again, anytime we see a strong move in one direction, we have to anticipate. We may not get it. We're an overall bull market, but we have to expect the bears are going to try to make that run back down and take out that low. So same thing we talked about here on the S&P. I would love to get all the way back down. I'd love to find the exact same trade again. I would love to not pick the bottom, but trap those bears in, right, and use their stops to fuel that run going higher, right? Or we may V-bottom off of that low, and if we do, what do? You buy as low as you can, right? You want to buy high. We look for that bear trap, right, on that V bottom. Again, this is repeating myself from the S&P. And if all we get, right, if all we got was a little tiny pullback, right, if all we got was a shot going lower, we don't take out that low right there, that'd be where we could buy nice and low. Right? Great spot to buy low on a double bottom reversal in an overall bull market. But we may not get that, right? If we don't get it, now my job is to buy as low as I possibly can. And the way you do that is what? With a bear trap. It will always be with a bear trap, right? Higher high in price and that trap below that low. So again, same basic idea we had on the S&P. One very key difference now between the Emini and the NASDAQ is the NASDAQ has this big run up into this trading range. And if you guys are a part of my free video classes right now or within the trade room, you know I love ranges because ranges is so darn easy. The amount we go below the range, we now project going above the range. We've got some definite major highs to contend with on the NASDAQ right now, but there's one thing the buyers want. The buyers want to finish off that rotation and take out that pendulum swing. So let's talk about this now. Let's talk about some ways to buy this, and could we sell this too? I think if we play our cards right, we can buy it and sell it if it goes higher here for tomorrow. Now, if we do start making a run going higher, you know this already. What's the best way to buy on the way up to that pendulum swing so I'm not buying high? It's always going to be a bear. It will always be a bear trap. It'll always be a bear trap. And again, this pattern we use in our trade room to make sure we're buying as low as we possibly can, right? So on the way higher, right, we're gonna buy bear traps if it really begins to run higher, right? If this thing really rips higher here, it wants to take out that pendulum, look for that higher high in price and that bear trap. Okay. Now, a lot of times what happens is with these ranges, right? What do we know about ranges? We know ranges love to rotate. We also know if we get a strong breakout, what happens? It pulls back for a breakout pullback. Okay. So what we want to think about now is take this, right? Take this area now, and this all becomes an area of support now. Okay, so now let's say, now let's say we get that strong breakout higher. Okay, now I don't want to buy high. Okay, we don't want to buy high, do we? We now want to look left and think about what was prior resistance over here can now be used as a support zone. All right, and these are usually pretty easy. What'll happen is once the market begins to cool off, right, on that strong run going higher, we'll get that two-legged pullback, right? A little bit more than that measured move. Once we get that two-legged pullback, usually this will be coming in again. Look left, find some prior highs, and usually it's somewhere in this area right here. We'll know more about this, of course, tomorrow once we get that. Look for that big move going higher, that clear lift off, that break out of that trading range, and then start thinking about that one two-legged pullback into support. Now remember, right, we don't pick the bottom, right? We don't pick the bottom. What do? We wait for the price to pull back, the bears commit, and we buy into those stops. So same thing over here, right? We don't pick the bottom because for all I know, this thing will collapse back down again, right? I can't predict the future. All I know is in an overall bull market, if I get a ripper that breaks through that range, I'm looking for those bears that come in, try once, try twice, and grab that two-try failure, right? And then where's the market want to go? You know this. It wants to go back and take out that high. Because anytime we see a big move in one direction, we expect a two-legged pullback and a retest of that high. Okay, so the easy one is that bear trap, which is in all reality, it's a two-try failure. It's like this one back here, right? It's a two-try failure pattern. We're trapping bears in below the 21 EMA, using their stops to fuel the move. Now, once we get that stop run, what's the entry pattern we use again? It's always a technical bear trap, right? And again, it's a higher high in price with that move right below that low. That's the way you add to the position. Or for some reason you didn't get that failure pattern, right? That's how you get into the trade on the way going back up to retest that high. Again, in the video course, in the free video classes, I call these two-try failures. It's a two-legged pullback, right? It's a two-try failure into a bear trap entry. Lots of examples of those in the free video course. The other variation of this is one of the easiest trades to take. And then, of course, we call a pop and grind breakout or a pop and grind channel. So let's say, for example, now we take out these highs, but we don't really punch through them, right? It's not like it's a strong breakout. It's more of a pop up and a grind like this. Okay, once it begins to pop and grind, you pretty much know how to trade this now, because now all you do is you go out and you draw a trend line off the highs. You bring that trend line now down around those lows, all right? And again, think about this range breakout, right? The area that was resistance gets flipped now and becomes support. This is a relatively simple idea. It's a breakout pullback. We break out of the range. We don't chase it as it goes higher, because as professionals, we want to buy low. We don't buy high. Okay, I don't care what the news media says, right? It doesn't matter. The chart is all we need. So once the price pops up, we are disciplined, we are patient to wait for that. Again, think about that two-legged pullback we talk about, right? Get underneath that moving average, get that two-legged pullback a little bit more than a measured move. And once we get there, for all I know, it'll collapse, all right? I don't have a crystal ball. What I'll do is I'm going to let those bears come in, let them commit, and just like back here, right? Don't pick that bottom like that. Wait for it to pull back to the moving average. Bears once, bears twice, and buy it up from there, right? Buy it up from there. All right. Again, these are called pop and grinds. They're very similar in the way you trade them, but they look a bit different, right? So one way is the strong breakout, the breakout pullback. Okay, those are obviously a little bit easier because they're so obvious. The pop and grind can be challenging because it's a bit slower. It'll pop up and begin to grind and grind and grind. And that grinder is the giveaway. The grinder is the giveaway. Mark off that high. Mark off that low, look left, find prior swings of resistance, and use those now to trap those bears underneath that 21 moving average and light those stops up like a Christmas tree, right? Back up to retest the high and leave runners tomorrow afternoon. Now, the next question is, how do we sell off the high? All right, we get a good plan of attack right now if we run up and keep going. But what if we take out this high? Remember, this is all-time highs, right? That's that 93.5 level. That's all-time highs. What if we run up here, right? And what if the buyers begin to struggle, right? What if the buyers come in and they trying to keep it going, right? They want to complete that pendulum swing, but they try once and they fail. They try again and they fail. This is where the money is made. The most consistent money is made on a reversal. I call these crown reversal patterns. They're very, very easy patterns. All it is, it's buyers once, it's buyers twice. In all reality, it could be like back over here, right? Where they went up, it was buyers once, buyers twice, buyers three, buyers four, and finally they got, look, right above that high, and bam, right? That is not a coincidence, right? It's not random. This happens all the time. The goal is go up into resistance. The buyers are now struggling to keep it going. They're trying to keep it going. They're going back. They're trying to keep it going. And remember, sellers want to sell high, right? Buyers want to buy low and sellers want to sell high. This lower low in price with that little bull trap high, I call these crown reversals. The bears will get in, right? Like over here. The bears will get in and try to sell as high as they possibly can. Why? Because it's an overall bull market. And the bears are smart, right? They're not going to want to sell as it goes lower. Because who's down there? Bulls are down there. The buyers are going to buy low down there and rip their faces off, right? I want to short this thing as high as I possibly can. Most importantly, because we're an overall bull market. So just like over here, right? Just like over here. Sometimes it's messy, right? Something goes up, the buyers once, the buyers twice, the buyers three times, the buyers four times. The key is get above that high, right? Once you're above that high, that's where the bears are going to want to come in, right? So again, we run up, and it could be here, it could be here. I don't know. All I know is if we run up and we start grinding, okay, that's a pop and grind. All right, but if it pops higher here in major highs, into pendulum swing, really any of this area right here, right, any of that area right there, right, it pops up. Now rookies are up here, right? Rookies are buying high like this. They're not buying low, they're buying high, right? Rookies come in, they try to buy it once, okay, that didn't work. They go lower, try to buy it again. Now think about this. Everyone who bought right here, their stops, right, their pain is right there. Right? All we need now is that little bull trap off the high, right? And whack it right back down again. All right? That is called a crown reversal. The easiest variation of these looks like this. It'll go up, get whacked back down, and begin grinding down off of that high. Draw a trend line off that low, up around that high. And again, we just have to get a bull trap above some of these highs up here. That's all we need to do, right? So look left, find some swings, and grab that first bull trap off the high. Now, I keep saying bull trap here. This could be any of the entry patterns you guys are learning in the free video course. It could be a bull trap like this example. It could also be a buyer failure pattern. It could be a pullback combination, a strength trade, right? As this thing liquidates and tries to complete a pendulum swing, guess where? Back down to take out that low. And guess who's waiting down there? Buyers, right? Buyers are waiting down there. Why? Because buyers are going to buy low in an overall bull market. All right, guys? My favorite trades here for tomorrow. I think the game plan is relatively simple. Now, tomorrow morning, though, right, we're going to trade this stuff together. So if you're watching for the first time today, and this is way over your head, definitely grab that free video course I mentioned earlier. That will make everything easier for you. Learn the terminology, learn the rules of all the pattern setups, a lot of examples in the free video course. But remember, the best place to be tomorrow is with me tomorrow morning, 8 o'clock Eastern time. We'll trade this stuff together. I can't think of any better way to learn this stuff and to come out and trade it with me every morning at the opening bell. I'll put all the important information up in my trade room membership links, my free class links, my Twitter feed links, the description of the YouTube video. If you have any questions, having trouble getting access to our free video classes, please don't be a stranger. We're always here to help out. You can call or use Skype or use email or use live chat. We're always here to help out with questions about brokers or charts or trade ideas or whatever question you guys might have along the way. All right, guys? Hope you learned a bunch here tonight. Hope you use this knowledge to find some beautiful bear traps and make some money, or some bull traps, some crown reversals off the high. Hopefully I'll see you sometime soon in the morning trade room. In the meantime, though, be well out there. Be nice to each other out there. And I'll see you guys same time, same place tomorrow night. Adios, amigos. Bye-bye for now.